Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Matterport reported first quarter 2023 results after the market closed on Tuesday. And I think this was a really interesting quarter for the company because what we need to see is a growth in both the company's subscription and services revenue. Losses diminish in the hardware segment. That's where the company has really struggled, actually losing money on hardware sales, and then see better adoption so that this can potentially become a platform company that other companies will build apps and services on top of. We may be starting to see some steps in that direction. And if the company has enough cash to be able to get to a better growth phase and better margin phase, I think this could be an interesting investment. So that's what I'm going to dig into today. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And let's get right to the results. I want to start with a couple of things that management highlighted because these are the areas that we want to see growing. Subscription revenue up 16% from a year ago to $19.8 million. That's not a lot of growth for a company that should be growing in excess of 25, 30%. But services revenue over doubled from a year ago to $8.7 million. So put those two together, and that's a pretty solid growth rate. And it's the segment that we want to see growing. Total revenue guidance for the year is also expected to be pretty solid growth for the year. Now, this compound annual growth rate is a little bit misleading because a lot of this growth came early in this phase of growth. But given the fact that there's been a lot of pressure on SaaS services over the last year, these are okay numbers as far as the revenue goes. Loss per share is also improving. I'll look at a couple of the numbers in just a second, but this does tell us that losses are getting a little bit better. Those operating costs are starting to come down. And here is what I'm talking about with the segments and then where margin is coming from. So you can see the first number here is the subscription margin, $19.8 million, 70.4% non-GAAP gross margin. Licensing, very small piece of the business, but that's 100% margin. Services, 29% margin, not enormous, but that's going to probably be about where we look for the service side. And then product was actually an okay margin at 17%. You can see it a year ago, product was a 2% gross margin. So as a result, with operating expenses staying about flat, the company's net loss came down pretty sharply. That's a positive trend, but keep that loss of about $20 million in your mind because when we get to the balance sheet, that's going to be important. Here are the highlights from the balance sheet. And again, management puts the big number right up here. $456 million in cash and investments. So if we think about that $20 million number as what it's going to be burning every single quarter, that means the company has a few years of runway. So that's a positive trend for Matterport. This is a very large amount of cash, and the company doesn't have a lot of liabilities. So that should be a point of strength for the company. The question is, can Matterport get to profitability with its current business? Here's the full year guidance. For next quarter, we're looking at $38 to $40 million in total revenue. And for the full year, 155 to 169. So not a lot of growth in the back half of the year. And then and you can see that with this growth number, 33 to 40% in the next quarter, and then coming down into the high teens, low 20 percentages for the full year. So things are really going to be slowing down for the rest of the year as managed, or at least that's what management expects. But I want to highlight some of the metrics that we should be looking at for Matterport because this is a business that could become a platform that other companies build on top of. And some of the partnerships are really interesting, but it may take a couple of years for these partnerships to really pay off. So subscribers, 2 years ago, the company had 331,000 subscribers, now 771,000. This is like the top of the funnel for the business. A lot of those subscribers aren't paying. They just did a Matterport of their home or something like that, but it gets them in the ecosystem. And so that's why this number is important. Spaces under management, 9.9 million. Again, people are using the platform. So that's really what you want to see. Now, from a partnership standpoint, you have an integration with AWS, TwinMaker, Autodesk. I think this is really the important one. Autodesk is the biggest name in the construction industry and architecture. So having a partnership with them is going to be really important for potential growth long term, and integrating into the workflow of the companies that are working on construction. I think that's really where you see a lot of potential value add for Matterport. And it just needs to get integrated with the right people. And the number of customers are increasing as well. So 25% of the Fortune 1000 are customers in some way, shape, or form. So that's a positive step in the right direction. I thought this was an interesting product highlight because this really shows the power of Matterport. especially for showing a home. You can build a floor plan, do a preview video, and have that whole Matterport tour, the dollhouse that you see there on the bottom right on the computer. It's a really interesting sales tool and something that I hope we'll see a lot more value from both realtors and then also companies like Airbnb, because this allows people to see what they're seeing, what they're renting or what they're buying before actually going to see it. I still think Matterport has really valuable technology and could play a big role in being a platform play for a lot of companies to build on top of. If you think about services like construction, whether that's new construction or doing an addition or remodel or doing maintenance on a home, if you could send somebody a Matterport of a part of your home that you want some work done on, they don't necessarily have to come out and spend the time to do a bid at the site. They can actually just do it digitally. That opens up a lot of possibilities. The challenge for Matterport is they have the technology layer. Now they need other companies to build their businesses on top of Matterport and use them as a service. We're starting to see that slowly happen, but it's not happening maybe at the speed that we would have expected a couple of years ago. What I think is really positive for Matterport is it does have a ton of cash and it's not burning it all that quickly. The run rate currently is about $80 million per year, with $456 million in cash on the balance sheet. The company's got over 5 years of runway. So if we see growth continue and the company build out a business model, it's got the room to get there. But we need to see those steps continue to go forward. I'm cautiously optimistic about this company. I have owned it since the SPAC merger was announced, so I'm excited about what it's building. But at the end of the day, we've got to see this company get to cash flow positive. And that's still probably a couple of years off at this point. Steps in the right direction for Matterport. I just want to see more and more movement in that direction and more growth from the top line. That's really where investors are going to be focusing. But what do you think of the results? Leave your comments in the comment section below. Thanks for watching, everybody. See you here next time.